So let me show you a very simple model you can apply on gold and become very profitable with it. So now this model is going to combine a particular concept that I know so well, which is price delivery algorithm. Now I already added CLT here, but I'll be honest, I'm not sure I'll use CLT in this video. But then the knowledge is very simple. The topic is price delivery algorithm. Now, under this price delivery algorithm, it is just talking about how price actually moves. You know, when we talk about external range liquidity to the internal range liquidity, if I have a range like this, if I have an impulse like, a bullish trend like this, so we're talking about how price moves from the external range liquidity back into internal range liquidity. Now, the external range liquidity are the ones we know to be found at the highs and at the lows over here, the high. So when price takes an external range liquidity like this now, we expect price to trade into internal range liquidity and also trade back to the external range liquidity. So that's just a basic concept that we know about algorithm delivery. Now, the next thing we need to now know is I'll be making use of one of the simple internal range liquidity that we are familiar with, which is the fair value gap. So now the concept here applies, and it states that price moves from external range liquidity to internal range liquidity and back to vice versa. That means it also goes from internal range liquidity back to the external range liquidity. Now, what I want to apply here is something that works on gold and every other instrument, but I want to show you how I've been able to take advantage of this on gold and also how you can also master it. It has been giving different opportunities on gold. So it's a thing that if you don't know it today, or if you have not been taking advantage of it today, there are several opportunities that are still available that you can also get to benefit from just after you learn from this video. Now, how does it work? The first thing that you must use here is understanding how to use this on the higher time frame. Now, majorly, what we are using this algorithm delivery to get is directional bias. So I want us to put on one side here that directional bias is something that we want to really get so well, because I understand that a lot of traders struggle with getting directional bias. Then after we get directional bias, the second thing to know is the entry model. So in this video today, I'll try my best to explain a bit of both, talking about how I was able to enter some trades on gold. Now, this is the second model. We also have a third and a fourth and even a fifth, but I will stop here for now. Now, using this particular one to get targets means anytime price is leaving external range liquidity. Remember what I gave you regarding structure earlier? When we have something like this, price doing higher high, it trades back into internal range liquidity and then goes back to external range, keeping up with this kind of cycle. This is exactly the cycle of delivery. Now, over here, where's our external range liquidity? We're going to keep this high as our external range liquidity, and let's label accordingly. So we have the external range liquidity to be here. Now, a fair value gap that we are all familiar with has 3 important levels. And if you want to use this, I would advise to start using this on a higher time frame. So if you have a fair value gap, it has 3 important levels, and the names are, the first one, we call it the IOFED, the institutional order flow entry drill. The second one is consequent encroachment. That's the 50% of your fair value gap. And lastly, we have the complete fill. That's the total fill of the fair value gap. Now, these levels are all important, and anytime price trades into them, how do you confirm if price wants to react or it wants to use any of these levels? I would say that these levels are liquidity levels, but then they are also like key levels of reversals, and they can also form great biases if you know how to use them well. So if price is trading back into internal range liquidity here, how do you confirm if any of these levels is holding? One of the easy confirmation is price doesn't close below it. So when price is going down this time around, it's going down with bearish candles, right? So how do you confirm if price is going to use IOFED here? You will notice that price will trade into that level, but will not close below it. That's one of the easy way we get that a level like this is holding. So if price trades into your fair value gap and you see price not closing or rejecting, you can see that rejection here, right, with the wick not closing below it. We can tell that price has already mitigated this IOFED, and now the next target, remember the IOFED and the fair value gap here is all constituting part of the internal range liquidity. And when price takes internal, you can see price goes from external into the internal. Then when it's done taking internal, it goes back to external. It's a simple model and it's as simple as that. But if you understand this, you can use this to get great directional bias, even as a day trader or as a swing trader. Now, when price reacts at any of these levels, like I said, it can give you an hint of where price is targeting next, which is going to be the external range liquidity. So the next kind of move or candles you can expect is to get bullish candles that will trade into the target, which is the external range liquidity we have over here. So we can be expected to have series of bullish candles that will take us to the draw on liquidity. Because this time around, this area here becomes the draw on liquidity. The highest point here becomes the draw on liquidity. So that means once price mitigates your internal range liquidity, the highest point here now becomes the draw. What we can use as our, I like to place magnet over there. Now, the way this works is that if you're on a daily time frame or 4 hours time frame, and you see this happening on any of your graph, price rejecting there, the highest point, the immediate high in that case is your target. Now, on the lower time frame, that is where we now make use of order flow, because the structure that will take price to that target, if I get this on the daily time frame now, on a lower time frame, I will definitely get the whole of the bullish structure. And that bullish structure is what I will use in getting my opportunity towards the draw on liquidity. Like, this is one kind of approach that is like, we can say it's like, it has 90% accuracy, as long as everything that is, everything checks out. It does that 90% accuracy. Like, you can beat your chest and say, yes, price will get to this target and it's going to get there. So it's a very crazy model that if you know it very well, you can use this to your advantage a great number of times. Okay, now the other flow that you are seeing here, which is the structure, is exactly what you will now use. That's where we come, the entry model comes in. And I always advise you can learn as much entry models as you know. As long as your bias is correct, any model you know as your entry model is like a plus to you, because over here, the more entry you can catch, the more advantage you have, obviously, right? You can see the more entry you can catch, and that depends on the models you know. So if you have only just one model, like for example, you have this as your model, inducement POI as your model. That means only when the market creates this kind of model is when you'll be trading. When we have an inducement here and a POI over here, just like the one we can see over here now. So does it mean that it's only on those parts alone, only just one entry you'll be able to get before price gets to your target? So the more model you know, the more the greater it is to your advantage. And that's just by the way. After knowing this, like I said, any of the levels, you can see we have 3 different levels of a fair value gap. So I'm not saying the IFL here is directly the first level or the only level that price reacts to. But if price wants to react at any of the levels, you don't expect price to close below that level, below or above, as the case may be. So if you're also having price reacting at the consequent encroachment, we're going to have the same thing happening there. In fact, that will even give us a larger target, because the further price goes into internal range liquidity, the further it is to go back to our external range liquidity, okay, which is the draw on liquidity. That's a target in this case. That's going to be the target. So over here too, if you have a similar thing, and price trades into the 50%, it doesn't close, and then we have the complete fill. Now the complete fill is like a total, that one is like a total reversal. The complete fill is like a total reversal. So anytime you see price entering into a fair value gap on your higher time frame, even your weekly time frame, your monthly, or any time frame you want to use at all, and price doesn't close into the gap, just know that the immediate high, which is going to be the draw on liquidity, is the target. And if you see this on a daily time frame, you can just go and collect drums and start dancing, because what you are going to get on a lower time frame is series of moves that will give you different opportunity. Now, you're going to be buying with stark confidence of knowing that price will surely get to this point. So even any supply POI you see on the left hand side, you will disregard them, because you know where price is heading to. And that's one of the secrets of a profitable trader. Once you understand directional bias, your models, everything aligns towards your direction, not against you. Okay? POI will not work against you, things will not work against you, as long as you have a very strong directional bias and your entry models are also solid. Okay? So now let's not talk too much. This is for bullish and this is for bearish as well. Okay? We have the levels of the fair value gap in bearish term as well. Okay, price can come and react at any of these levels and you know the name, you can see the levels are inverted in this case. The levels are inverted in terms of their names over here. So that means if price starts trading now from this point and it starts making a retracement back into any of those levels, they are like areas of possible reversals for price to go back to the external range liquidity over here. So let's go back to the chart on gold now. Let's see where this has worked in recent time. First, I would like to show you the one that I traded on this guy here. Now, pardon me for all this charts work I have over here. So I have a particular trade I'll just use my previous chart instead of me doing fresh. Now, what do we have on this chart here? We have a similar, let me just turn off the whole thing. Do you guys see that? We have a tiny fair value gap here. I'm not going to show you the previous source because it has been working like that several, you can see. Look at this area here. This is a fair value gap. Price trades into it and booms all the way up again. A similar thing here, price trades into this gap. A similar thing here, price trades into this gap. So a simple way I do it and a simple approach you can always use is once you just find the gap, just put a line. So over here, you'd see me putting a line. You see that now? So just put a line at the IO Fed, which is the one that indicates the IO Fed here. Just put a line there. Or let's go to a gold chart. Okay, no, don't worry. Since I don't want to waste time on this, I have the drawing there already. So this is the gap, right? Let's put a line. Let me put a straight line over here to indicate the key level. And you can see this candle here, the one that trades into the gap over here. Now, once you get a rejection inside the gap, so let's go to the 4 hours. Let's take this all the way to the 4 hours now. Now, this is the line I have as my key level. And this is the point price traded into that line, into that level. So, like I said, going to a lower time frame, you will get the order flow that you can use for your entry towards the target. So let me go straight to the entry time frame over here. So I'm taking all the way down so you can see the order flow. So I want you guys to get a lot of value from this, and it's a simple model, like it's repeatable and also very, very effective. Now, this is the key level you have over here, right? Now, the key level, the fair value gap level, was something that we reference on daily time frame. Now, on the lower time frame, so that you know, those levels are marking. When I say you should use the fair value gap, the IO Fed or whatever, they always align with something on the lower time frame. Now, when price was trading into that internal range liquidity, the one we see on daily, there was something here as a demand over here on the 15 minutes time frame here that price traded into. Now, since I know, it's not a thing that is just today, it's like a model that we already find, like we already understand that this is a model, an already established model. So we as traders now, we are just like, we are doing copy and paste. That's exactly what you call a trading system. A system is something that you can easily just teach and repeat over and over. You know, when you say rinse and repeat, this is exactly what a trading system will look like. So, let me show you that now. Okay, very good. This is exactly what we are talking about. So over here, you can see. So when the price traded into this level over here, I told you, when price rejects into a fair value gap or a key level on the gap, it's going to trade from internal range liquidity back to where? Back to the external, which is the previous high that formed that retracement. So here now, how will it get there? It's going to get there with a bullish structure. So I saw that price was already building up a bullish structure over here. You can see the other numerous opportunities of entry, which I did not take advantage of until I now saw a QML entry. Okay, and now what do we call a QML entry? That's why I said you must learn different entry models. So this is an example of a QML entry. This is a QML entry. Okay, so the QML is this level here. This level here is QML. So the entry will be taken anytime price comes back to that same level to go back up. So this is what we call QML. It's like having I used to call it Kano, inverted Kano, because then before I had a name for it, this is what I always call Kano then. It's been a long time. That was 2021, a very long time ago. But the name then, I knew that this model or this pattern was always repeating itself in the market. So I never knew that people call it QML. So I just named it Kano then. And now is that a popular name that people know as QML. So now that was the model I used for this entry over here. Okay, that was the model for the entry here, you can see. When you go to the line chart over here, you see that model, can you see? So that same line is the one I inverted, and price came for the entry over here, tapped into the level. And now my TP is going to be to the previous high. Can you see? The target is going to be all the way to the external range. Now, when price got to the exact target, what happened? Price reversed. Now, of course, I'm not expecting price to reverse, because when price gets to external range liquidity, it can as well just break and continue. But over here, when price got to external range liquidity, there was a range. And once this kind of thing happens, it's already indicating that price has taken external. It will likely want to go for deeper levels. Okay, so, and that was exactly what framed all the setup. But that's not what I'm really looking at. After seeing that particular big buy to this target playing out exactly as anticipated, the current sell I took just of recent is what I want to show you. So I took a sell trade just of recent, and I want to show you what actually formed that model and that bias. So let's take a look at it. Now the model was formed on the daily time frame like every other one. So look at daily time frame here. So how did I get the model? It's a very simple thing also. Very, very simple. All I did was check out my fair value gap on daily on gold. As simple as it is. All I did was check out my fair value gap. So I saw that there was a gap here on the daily time frame on gold. And like I told you, a gap has different levels. So I took advantage of that gap, and I used the complete fill. Okay, when you have a bearish fair value gap, remember what we call the complete fill, right? The complete fill is the point where my price completely fills it up. So I placed a straight line at that level. Can you see this level here is where I placed that complete, that's my complete fill level. Then I went all the way to the 4 hours, the way I would normally do my refinements. So on the 4 hours here, I mapped a key level also on the 4 hours here. This is a key level. So, and then I took it, I think it was on 2 hours. Let me see. I mapped the key level over there, and then I took it all the way down. Yes, this is it. Now, the moment I saw that price had traded into the complete fill of a daily fair value gap. Now, one thing about this is that you are not going to be trading immediately price enters into the gap. You trade after you get a shift. If you check out the buys I took earlier also, I did not just enter the buy immediately price got into the fair value gap, because I don't know which of the levels of the gap that price wants to use. It can go for higher Fed, it can go for complete fill, it can go for 50%. So you must always wait on lower time frame to get a shift. Once you get a shift, then you follow. Now on the other one also, what I did was I had to get a shift. Let me show you. So this is the level, right? This is the level we have here. So once I got a shift, then I knew that that was my signal to go in. So let me show you how I got the exact POI. So over on Sunday evening, when I was having market outlook, I gave a level for sell on gold. Now this was the level I gave on Sunday. That was just in the heat or in the rush of the moment when I was just doing my analysis. So I gave a level here as my POI on Sunday. Now, to be honest, I know that gold doesn't respect this kind of POIs. No doubt about that, because the POI is looking like liquidity itself. So on that particular day, what I did not do is I did not think beyond my eyesight. Now, what I did was I just marked this on Sunday and I left it like that. Now, on one of the ways I refine, maybe in my other videos, I'll teach you how to refine. So this particular area here, I could have gotten it, like I can show you exactly the level that price came for, and also how you can see this kind of levels also. The POI I marked here and where I stopped that POI, okay, is, okay, don't worry, like I said, I'll make a video for that. So that level here is what I saw, and that place is the last point that price was supposed to use. If you go and check on lower time frame, let's go to 5 minutes. So I took a sell. Let me show you what I did. I took a sell initially from here, and then once I took that sell, I have a way I confirm my thing. I've done this in my previous on my channel on Telegram. I've thought about how you can use gap even to confirm reversals. Now I took a sell from this level, right? And I wanted price to sell, but immediately price rejected. I told people about this, how you can use fair value gap to know if your POI is reversing or not. Immediately price rejected inside this gap. Oh, that was my warning signal to Japa, and I let that trade. And of course, you know, that thing confirming exactly my fear, it happened, which is price breaking the POI. So I knew that, okay, price was going to a higher level, and then I marked out my own so-called higher level. Now my refined level would have been this refined key level over here, because this is a key level over here. Let me show you the key level here. Now this is a key level over here. Okay, this high here is the key level, and that would have been almost close to the place that price, okay, yeah, price didn't even tap into its key level, but that would have been my refined key level, to be honest. But thank God for my 15 minutes POI level. I swear I love that thing. I'll show you. Let me show you this video, so you guys don't say I'm keeping the source away from you. So let me show you in this video. So one of the things I use in refining my POI is if I have a particular zone that has a wick like this. This is it. Look at this. This is exactly what I did. The minute I saw that we had something like this as a candle, and I had a wick, this tiny wick here was the confirmation I needed. So I've showed you what I saw, but then I'll get to explain more when I teach about liquidity inducement theorem or liquidity inducement traps. So over here, I saw this high as liquidity, and I had this level as my sell level. And of course, price started selling off crazily. Now, I didn't take much of the sells because it was on a Monday. So I took the sell here and then I just jumped out of the market. But the major one itself was now the sell that happened today. Okay, that was yesterday because we're in a new day now. Now, how did I get the sell? So what I did in getting the sell was quite simple. First, I'll show you on the 5 minutes time frame. So you can also take advantage of something like this as well. And I would say my trading view is not doing justice to how I got the POI, because I saw that POI clearly on my phone, which is on my broker's platform also, because I was glued to my phone. Gold is one thing that will keep you glued to your phone, right? So I was glued to my phone and I saw that level on my mobile phone. So I marked out the level. Now on this area here, if you ask me how I got the POI, I'll tell you it's a key level also, which is something like this. Is a key level for me. Okay, it's a key level. Where is the key level exactly? This level here is a key level. Okay, so that level is a key level. And again, why I knew that price was going to go back there is something like this. When price made the first retracement here, price left that level before dropping. So that's a sign of an inducement. It's part of my entry models that I trade. Okay, that's one sign about an inducement. And once I saw that inducement, I knew that price was going to go above the inducement and go for my main source, which is my main level. And that was exactly what price did. Took out the inducement to go into the POI and then dropped. And that was just all I needed. So I took my sells right from here. I would say I took myself from here because I took my sell right from this point here. And now the rest is history. Now market wine me, I'll be honest. The market wine my emotions at the beginning. Gold is a very volatile beach now, you understand? So market was winding my emotions at the beginning because all I needed was, once I took that sell, just drop. Like, guy, just drop and let me just have peace of mind. But Gold said, no, you're not having peace of mind. And then later on, my phone went off again. So that was one of the things that actually brought about the success of this trade, because I'll be honest, if my phone wasn't off, I'm not sure I would have taken the full trade all the way to the target. So, and the target is still very far actually, because if I follow the pattern and the rules that has been stated, that if price makes a reaction into your internal range, your target is going to be the external range, then definitely what we see here is price. You can see all we had here was just price making a retracement back into internal range. Then the target is definitely going to be where it's going to be this external range, which means all I need to do right now is look for sales, which I'm thinking we're going to likely be having that very soon on gold. So for today, which is going to be Thursday, no, today's going to be Wednesday, 5th of November, I'll be taking sales on gold because the target for me based on the rule has not been met. This is the main target for me on gold. So let me show you something else on the weekly time frame here. During the weekly market outlook that we had on Sunday, I shared that I was expecting bullish run on gold to this high. And now the reason for that is because the immediate internal range we can find on gold here is this gap. And I've explained that any of the levels that we are, which is the favor, the consequent encroachment, the IOFRED or complete fill. So last week I was able to see that market made a complete fill over here. Look at this. Can you see there was a complete fill here on the weekly time frame? So that was one of the reasons why I already had a bullish bias framed up on gold. Look at this. So you can see how price traded into that internal range over here, and there was a reaction from there. So that was even why I started looking for buys last week. Can you see the main price entered that level? That was why I started looking for buys, hoping that price will continue going up. But right now, this is we are currently having price not giving us exactly what we want. But then price has already mitigated this major, though this is a major internal range over here that has been mitigated already. You can see price already mitigated. So I'm expecting bullish all the way up to this external high. And this is a very long target. But right now, gold is not giving us bullish momentum here, because one of the conditions I gave over the weekend is that if I was going to get the buys, I want price to continue the bullish momentum, and that would be, look at the bullish momentum. This is where the whole range of the bullish has started from. Let's take a look at 45 minutes. Okay, this is a sell we took, right? This was a sell I gave the breakdown on just now. Then take a look at this other one. Now, this is where price mitigated, which is a weekly fair value gap. Price mitigated that level here and started building up this bullish order flow. A high, a low, a high, a low, a higher high. Okay, so we are seeing this now as a low, because I was also expecting price to buy. That was why I marked that level as liquidity. So now my expectation now is for price to go and create a new high, and maybe this time around create that new high with momentum, so that we can be able to follow that move all the way up. So I'm seeing this as bullish move, but then price is not giving us that confirmation. Like, the strong kind of follow-up candles are not coming with it, and that's why I'm not really so confident about the buys yet. But yet we are not going to take away the buys away from our sites. Okay, we are not going to take away that buys away from our site. The major high over here is a very long target, a very, very long target, but then if price can deliver what we want, it's going to reward it also. Okay, price coming all the way from external here to trade into the internal, which is a weekly time frame internal. You can see that, right? Price traded all the way from this high to trade into this gap over here, and it has rejected inside the gap. So that rejection is a confirmation I was looking for, and like I always say, we get the shifts. We got the shifts of the lower time frame already, but now we are looking for follow through, because this was initial shift over here. Price breaking this high, but then this is the high. This is the first low, the second high, low, higher low, and we're expecting a much more higher high over here. So that is my expectation on gold. I'm expecting a continuation to the upside. We can get that bullishness right on gold right from here. Okay, we can be getting that right from here to go up now, or it can come later. But then just don't take away that away from our expectation on gold as well. Okay, gold is very, very volatile this period, and if you can get a very good trade on this, it's really, really going to be worth it. Like, massively worth it for you, because you can get to catch more than 10,000 pips. Let me just measure from here to the target. Let's just see a view of what's okay. Not 10,000 pips, but wait. We can be getting like this is 4,000 pips from that place alone. That's just something crazy, very, very crazy to even get. So, but then we are going to get that after we get the required confirmation that we need. So this is my expectation on gold for the long run. Also, because currently now gold is reacting from a level. A lot of traders are looking for sales on gold to continue going lower. There's a level here that price reacted from. There was a change in structure over here. So a lot of traders are actually anticipating for sales, but me personally, I'm not seeing the sales, because I'm still following my higher time frame, right? So over here, there's no reason for price to come to this area for now. There's no reason for price to come to this area for now. I mean, below here, right? Below here, there's no reason for price to come below here for now. That's if it still wants to maintain the bullish momentum, okay? So, but we can see price going either to this level over here. I think there's a level of unmitigation over here that price might want to reach out for. Okay, that price might want to reach out for, but this is all mere speculation, right? It is not really confirmed yet as the main POI we're buying from, because I've not really gotten any other entry model to confirm that bias for me. So, but then I'm just giving the speculation of the major targets we're looking out for price to go. And of course, you don't have to worry yourself about catching it early or this or that, because there's still a long way to go. Like, look at the target now, it's still very, very far away. Very, very far away, very, very far away, all the way to that. So even if price doesn't give me any entry here because it's not clear, I'll definitely get more entries along the way before price gets to the target. So that's not a thing to worry about. Okay, so but then, like I said, don't really just react. First, I have been able to do this, and reacting based on the fact that the higher time frame structure here tells me price is going to the high, which is right at the top over there. So following that is what brings about this whole structure we are looking at. So, and that is exactly what I'll be trading. So guys, I hope you guys have if you have a different thought, you can share that with me on my Telegram channel. You can just reach out to me on Telegram or reach out to me on IG, and let's discuss this over the weekend. Alright, that'll be all for today's video, and I hope you got real value from it. If you did, make sure you hit the like button so YouTube knows that it helped you. And if you are not subscribed yet to the channel, I don't know what you are waiting for. Make sure you subscribe now and turn on the notification bell so you don't miss out on the coming episodes. Thanks for watching, and I'll see you in the next one. Peace.